So we are gonna go over the time theory and the wave theory, but we're gonna first go over the wave theory because the wave theory is where most of the big trades are going to be. All right, you don't necessarily need the time theory, but it does help you understand where price can potentially go. As you see here, if y'all watch my videos on YouTube, I called the 27th for prices to start going up on XRP, but it did start going up, but it actually started back in here. So there's a way that I got that, and I want to reveal that to you guys on how to use the time theory. So what you learned, take that away, erase your mind, and start fresh. You gotta have a fresh mindset today. So I want y'all to really write these numbers down, and if you have any questions, stop me if you need to. But this is going to be a little advanced and a little basic today. So write these numbers down and write this word down. So these are the basic numerical values of the Ichimoku time theory. In Japanese it's called Kihon Suchi. It's KIHONSU. If y'all don't know how to spell chi, then I don't know what to say. These are the basic numerical values. So write these numbers down. It's 9, 17, 26, 33, 42, 51, 65, 76, 129, 172, and 200. So these are the numbers that move in cycles in the system. These are the numbers that they call the Hinkabi, which means the day of change, or it's where the market wants to turn or reverse or accelerate or extend, meaning like right here, you see how on the 27th day, market extended and pushed the market higher. So this right here in the wave theory, this whole move was an I wave. So that's how you get the waves right here. It's based on time and the structure of the market as well. So another the secret numbers of the Ichimoku time theory is either +1 or -1. So you know how number 9 is one of the values. 8 would be a value and 10 would also be a value. So plus or minus these numbers as well. All right. So any questions so far? Questions? Y'all be scary sometimes when I ask y'all questions. But no, okay. So what I'm gonna do, I'm gonna show you, and I want y'all to, you could either take a picture of it and or screenshot it. I want y'all to make sure y'all got this tool. So when you go to trading view, you gotta go to your tools on the side. You're gonna go to your tools on the side, and you're gonna go to the fib time zone. All right, go to your fib time zone tool, and you're gonna whip it out. So how you use it, you pick a level. You say like the lowest level here. You just move it over one candle. All right. You see these lines? These are the lines or the values that the price. I mean that the time works. So it puts in the numbers for you at the top. So this is what you need to write down right now. So take a picture of this because I want to go through this. I don't have time to be, for y'all to, just.
Where did you start to draw the time zone?
Oh, where I started. Oh, I'm gonna teach you that in a second.
Okay.
Yeah, I'm gonna teach that in a second because it's very important where you place it. Um, just to answer your question now, you place it at either the high or the low, or at a fractal level. Wherever you see a fractal, you can place it there. But you want to pick the recent high or the recent low of a fractal. All right. So yeah, I hope y'all take a picture of these numbers. So what you're gonna do when you put in your numbers, what you're gonna do, you're gonna take a picture of this, put these exact numbers in how you see them here, all right? So once you get that done, then you could get this same setup here that I have, because the default settings, you're not gonna get these numbers, and it's gonna give you the wrong information. These numbers are derived from the Ichimoku system 9, 17, and 26, which is based off the clouds, all right? So once you get that in, you could start using this tool, and I'm gonna show you. Let me go ahead. Bottom.
I'm on my phone, so I can't see the numbers that well. Is there anywhere else I can go to get?
Yeah, I have these numbers in the group chat already.
Okay.
I just haven't went over this because I said y'all aren't ready for it yet, but I think it's time that I at least touched up on this so y'all start getting an understanding for yourself on how it works.
Okay.
Right. But let me show you. So this is the low right here. If you notice on the time, this is 9, 17, 26. So if you notice on these days, you can find trades at these numbers. So you could either see if the market's either gonna accelerate like it did at number 9, or reverse like it did at 26 up here. And day 17, you see a market accelerated again. It actually had a pullback and then it accelerated. So from here, from day 0 to day 17, right here, we see that the market moved higher. But if we're looking further, almost to day 26, we see the market made pretty much an I wave, right? So there's 5 different waves, all right? So write these waves down. You got your I wave, you got your V wave, you have your N wave, Y wave, and P wave. Now there is another wave, but those are harder to spot, and most Ichimoku traders don't teach it. It's a S wave, so that's the 6th wave. But uh, N wave and an S wave look similar. The only difference is a S wave is a lot longer than it's sideways. It's more sideways than straight up and down. All right. So I'll identify just the basic 5 for you guys. So here's one. You want to look an I wave here. So say from this point to this point, the market made an I wave. In a P wave, what you see right here, this red figure that's stuck in the price and stuck in the clouds. This is a P wave right here. N wave. I'm going to show you a V wave too right now. This is a V wave right here. From this high point down to this low point, you can even extend it down here if you want. This was a V wave, but usually when you see a V wave, you don't want to catch the far end of the wick. You want to get the wick that's closer to the price where it's moving here. This is a exaggerated wick. You want to avoid exaggerated wicks. What I mean by exaggerated wick, let me show you. Look how long this wick is versus this one. So you want to avoid these type of wicks. You want to line up that V wave or that wave from here. All right. You have your V wave. And you could also say this right here is an I wave right here. And then you have your second I wave here. So 2 I waves make a V wave, right? And then when you're looking here, you got your P wave and this formation here, this red line and this top red line. This top one and this bottom one makes a P wave. So if I was to take off the clouds, you can see the P wave a lot clearer, right? Any questions on that so far? Or any questions at all?
Yes, I'm having a hard time seeing these waves.
Yeah,
So,
these
I'm,
waves. Yeah, go ahead.
yeah, I'm trying to get my brain to visualize each of these waves. So, I mean, the I wave makes sense. The P wave. So, where's the P wave? Did you just mark out the P
Yeah,
wave?
this is a P wave right here. So if I put a line from here up, see how it makes a P like formation? Let me let me
Okay.
let me break it down even more. A P wave
Yeah.
is just a triangle. Does that make sense?
Say it again. Sorry, you cut out. It's just the what?
A P wave is just a triangle.
Okay.
So you know, like when you see symmetric triangles in the market, or you see the
Right.
ascending or descending triangles.
You're right.
Those are just P waves. In
Oh, I see.
Yeah,
Okay, because I'm okay, because my eyes were looking for something else. Okay.
got you.
So it's like a pattern. It's like that
Yes,
flag pattern or ascending triangle pattern.
right.
Okay.
All it
Okay.
is price just consolidating in one spot.
Okay.
The reason why they call it that, so Japanese traders, they don't like using ascending triangle. They don't like to use those terminologies. They keep it simple and straight to the point. That's why they just call it P wave.
I see.
Yeah,
Okay,
so
now I
you,
get it. Sorry.
you,
Okay, that helps.
yeah, if you know the culture too, that's how they teach it. And I'm like, oh, okay, that makes sense. So, everybody has their own method of teaching. Japanese, they teach very differently than Americans. So a P wave is just where price is constricting, and you see it's not going higher or lower. It's just stuck in this range here. You see that it respects the bottom of support here as far as price coming down. You see price was making lower lows as it's coming down, while it's making lower highs as well. And then eventually it had to make a decision at this level if it's going to either break downside or break to upside. And this was a bullish P wave.
Does there have to be an I wave for a P wave to form?
Yes, always has to
Gotcha.
be. And I waves are just, and this is where it gets confusing, because there's I wave, the whole market moves in waves. All right, here's an I wave right here, and it doesn't necessarily have to be straight. All an I wave is just from one point to another at the highest point. Even from here, you can make an I wave from this point. You don't have to use the wick, but you can. But I'm gonna use it for this example. From here would be a good I wave right here, and you could also make this an I wave if you wanted to, but that's more of an N wave. So you got this I wave here, then you got a V wave right there, and then to finish it off, you got a N wave that formed right here. So what makes a P wave? So what makes a P wave? So price coming up, right? You see how price came up, found a resistance. Once it finds a resistance, what's going to happen? Price is going to start consolidating in. Usually it's just fluctuation, because right here, this is how a P wave form. I mean, yeah, P wave form. So let me take this off right here. This one off. So this is an I wave, correct? We see that this is an I wave. So you see how price made a correction right here. You have this impulse move right here. You have this correction. Once it made that correction, we're expecting the market to either continue down, or we're expecting it to come up. But since it's an N wave and we see that prices are moving higher and higher, we're expecting market to move up higher. But you see that it doesn't. So this is what an N wave would have been like. We're looking for an N wave here, but we never got that. Price failed to get above this fractal level, this high. So what ends up happening is price range and then drop. So if price can't get above that recent high, price is going to fluctuate and it's going to come down. That's how a P wave and a Y wave will form. Now, I'm going to find you a Y wave because Y waves are not common. They don't happen too often. But when they do, you got to be careful on how you trade them. I'll show you an example. There's one, I believe, on US 30. So here's a Y wave. All it is a backwards microphone right here. This is a Y wave. So you see how it's the opposite of a P wave. So you see a P wave constricts price. A Y wave extends price. You see how it's expanding here versus getting thinner. So it gets thin from the get-go, and then it starts forming and starts expanding out for price to make its move. That's a Y wave. All right. Let me show you another example of a Y wave. Here's another example of a Y wave. You see price gets constricted at the top for the beginning, and then it starts expanding and getting wider here. So when you're trading a Y wave, you got to be careful. And the reason why you have to be careful with these Y waves, you never know where they're going to end or where they're going to begin at. The market could make a Y wave at any moment. Like right here, here's another example of a Y wave. This is a great example of a Y wave. You never know where it's going to start or end. So here we see that price went up, and you see that it failed to get above this level. Like I said, when you're looking for an N wave, right here, you see that it made that N wave, but you see that it failed to get higher than this point here. Now, if you're going to extend this N wave out to here, this is where we see the N waves really start to form. I mean, the Y waves start to form starting from this point. So you see that price is just, it's not going lower and it's not going higher than this point until over here. And you notice when you make that Y wave, when it gets out into this, when it starts expanding, you don't know where the price is really going to go, whether it's going to break out. That's why you got to watch these top parts of the Y wave. Let me show you some. So look here. Pay attention to these top and bottom parts, because this is how you're going to trade a Y wave. You're going to trade them at these bottom areas. You're not going to trade them at the top, in the middle. You're going to look for a trade once it touches the trend line. If you're trading it in the middle, and if you lose money, that's on you. What happens is, say if you traded right in here, you're expecting that price to go up because look, there's an N wave right here. If y'all see this, y'all see this N wave? If y'all don't see it, let me draw it out for you with the extension. You got that impulse, which is their I wave right here. Then you got that correction. Then you got that N wave right here. Right? You have to just train your eyes to see this. You're not going to see this in the beginning stages. You just got to work to that. You see how price made an N wave here, right? So when you get an N wave, you notice here, once it hit this level, it started fluctuating, right? That's what you want to be careful of, is that fluctuation when price finishes that 1-to-1 ratio of that N wave. Once that happens, see that price was rejected at this level, and then you see it drop. That's why you cannot trade in the middle of a Y wave, because you're expecting price to continue up higher, right? But it never did. What happened is it got to the 1-to-1 ratio, and then it dropped back down to test this trend line again, That's the way you're looking for your trade. Take that to the upside once you get that confirmation of if it's bullish or bearish. So trading the Y waves is not so difficult. It's just I'd rather you guys wait for either the breakout or wait till it touches either the bottom or the top. I understand? Any questions so far? Questions at all? Questions at all?
No.
All right. Oh, I didn't realize you were on here, Jay. What's up, man? How you doing?
Yeah, I snuck in. I'm good, bro. How about yourself? How everybody doing?
Pretty good, pretty good. Let's see. But so far, I hope everybody understands the Y wave, the I wave, and the P wave so far. N wave is pretty simple. There's not much you can really say about an N wave. It looks just like an N. But how you want to trade an N wave, you usually want to trade it with support and resistance level, all right? If you notice back here, we had support at resistance right here, was a resistance right here, and we see that price is trying to move higher because it's expanding. If you see it was contracting here, then now it's expanding. We see that. That's why you got to use your trend lines, mark up the chart. So you see that price is expanding. So we now know if we look back here, this zone, this level, this is an area that we should look for a trading opportunity. Down right in here, right? So we noticed that price is rejecting here was a fake out right here, fake breakout. You see it got rejected here, rejected here, rejected here. It held up here. So now we know that this is a level where we could look for a trading opportunity because we know it's either going to break or it's going to go to the upside. So if you're trading with Heikin-Nashi candles, this will probably be a little bit easier for you to get in. Let me explain why. Because we see on this candle, we had a bearish candle, but look at what the next candle did. What is this candle? Anybody want to answer? Or make me call on somebody. You know I'll pick on y'all. What candle is this? I want someone to tell me what candle is it? What candle formation is this right here?
Is that a doji?
Yes, correct. It's a doji. So, okay, don't put yourself on mute just yet. What is a doji? What does a doji signify, Jacqueline?
Indecision.
Correct. Or what?
Market reversal.
Perfect. So we know that we should start looking for a trade opportunity here, all right? So this is on the 4-hour chart, right? So what we're going to do, we're going to highlight this area, make it red, right? Let me make sure I have no other lines on here. All right, cool. So now what we're going to do, we're going to go to the hour time frame to that exact same spot. Let's go out now. Okay. All right, so now we're going to look for confirmation on this trade. All right, there we go. All right. So on the 4-hour, we had indecision in here. So we see where the momentum's going here. If you notice with Heikin-Nashi candles, we had a bullish, we had a weak buy signal, then we had a strong buy signal, then we had a weak buy signal, then we had another strong buy signal right here. So this is telling us that the market momentum is headed to the upside. So we should have got in on one of these candles here, all right, just by looking at the momentum. Your first take profit would be at the B level of this N wave, all right? But how you're going to trade the N wave, let me show you something. right in my face. Let me go ahead and put this up real quick. Actually, I don't even need that. Hold on. Quicker way. All right, so you have A right here. You see that I wave form. You got A. This is B, right? Once you got that I wave, you could either expect the market to continue up or go down. Right here is C, all right? Our C level, we're expecting either moving to the downside or continuation up. So you had your I wave, you had your V wave form. So at this point, you're saying market's either going to accelerate or it's going to either accelerate down or extend to the downside, or it's going to reverse. So this was actually a trade that I made back in the past. I don't know if y'all remember this one, but this was a trade on May 7th. We had Hinka B using the time theory, and you see market reverse to the upside. So we got that confirmation. Now here's what happens. Price needs to break this level for it to even be considered an N wave. We know momentum's going up, right? The Heikin-Nashi candles are saying momentum's to the upside. But you see here, price started to waver at the B level. You notice that? Always be careful when you get to the B level. Don't just assume, oh, I think it's going to be an N wave. That's not how you should think. If you start thinking like that, you're setting yourself up for losing trades. Once you get to the B level, you should make sure you pay attention to this area and make sure it gets a break to the upside. Because if it doesn't, what's going to happen is going to come back down and start ranging. You don't want it to range because then it's a P wave or a Y wave is going to start forming and you're going to have to adjust the trade. All right. So you see that it did eventually break here and it's continued higher and made up to these levels. So how you calculate the N wave? So this is the tool you use. Let me go ahead and show you guys. So you go to your trend-based fib extensions, right? You're gonna go from that low to that high down here. And now you have your targets set up already. And you see that it hit that one-to-one level and that's a complete N wave. Well, let me actually show y'all the actual numbers that y'all should have written in your extension tool. Even pops up. So go ahead and take a picture of this. So you could put these trend-based fib extensions. Write these numbers in, or just when you get a chance, write these numbers in your tool. Because I want y'all to make sure y'all at least have this, so y'all don't
Hello?
have it. Yeah. Who's that? Who's speaking? Okay, I guess you'll be quiet. I guess I don't know, but but look here. If you notice, let me go back. Go ahead and take a picture of this. I don't know if everybody got it. Let me know if you got this picture taken of these coordinates and these numbers here. All right, I guess that's enough time. So once you got that, what you're gonna do, you're gonna look for support and resistance. So if we're using the cloud, we notice here, this is when this is how you can find your N waves pretty good. All right. Always look for support and resistance. Like I said, I didn't even need the clouds to know that this was a support level. Always look back in the past because the market tells you what you need to know. All right, let me go ahead and take the cloud off. Look here, it was a fake breakout here. You see that price got rejected here, went up. Price got rejected here, went down. Price got rejected here, went down. Price got broke here, went up. And you see, if you really break down the market moves in only N waves, I waves, P waves. Look, you got many N waves here. Just like that, you got many N waves. So the market's doing this all day, every day. You can make a trade literally all day just knowing N waves and and P waves and I waves. Once you got that concept in your mind, then you could, trade the lower time frames without fear. You just got to know your support and resistance level. If you're using it with the clouds, here's a good way how we could have got in this trade. We see that price got rejected at this cloud level, right? Price, the Heikin-Ashi candle showed us that right here, price didn't want to close too much lower than the previous candle. So we know momentum was getting weak. Then the next candle was a weak buy signal. Then the second candle was a strong buy signal. Then followed by another weak buy signal. So this is letting you know that the market is going to change directions. Also, if you notice here, go back a little bit. If you figured that this whole pattern was a Y wave, you would have been a lot more confident to take this trade to the upside because you know that the market's expanding. Just set up your trend, your extension tool. Make sure you take profit up here. Just based off using the information off the 4 hour and the 1 hour time frame, if you had taken this trade, this move alone, let's say you taking it right after this right on the strong buy signal. Had you taken that trade all the way to the top, that was 1,000 pips right there. So 1,000-point move in the market off that one move. Just using the N wave and going off the 4 hour doji that we remember. Let's go back to the 4 hour. Let's go ahead and take the clouds off so you can see that. Right here, we had our 4 hour doji. Remember, and then you see price pushed up hard from that point. And you see the 1-to-1 right here. It's just knowing your levels, y'all. Once you know and understand your levels, you're good. And then you see here, if price was going to continue higher, you should have definitely taken profit up here because you see that you're getting closer to resistance. That, or you should have taken it right here if it did pass that level because look, right there. The market gives you clues on where it's going and what to do. You just got to be patient and find what it's saying to you and then take advantage of that. All right. Any questions so far? Now I'm gonna touch into the time theory right now. I'm gonna really show you how I use it. And I use it on Bitcoin too, so it was actually a pretty good move on there. But let me show you how I use the time theory here. So what I do, I look for the most recent high, which is right here. This is the most recent high. So what I'm gonna do, I'm gonna grab my time tool. And if you don't want to use your time tool, what you're gonna do, because sometimes I don't use the time tool, but today I'm gonna use it just for purposes. But you come here so y'all can see it. You can only use the time tool on the daily time frame because it's called the day of change, not the hour of change or the 4 hour of change. It's called the day of change. You want to use it on the daily time frame. So you're gonna click that candle that you choose, move it over one, boom, you got your coordinates already put in place. So tomorrow is actually going to be the 9th day right here. So we're expecting something tomorrow. So if you're trading S&P 500, expect a move tomorrow. The market's either going to accelerate tomorrow or it's going to reverse. So we already have this set up. It looks like market wants to move higher tomorrow. We already broke that high right here. but we need to confirm that on the lower time frame. So what I'm gonna do, go ahead and make this visible on the 4 hour and the 1 hour chart. All right, so here, and also let me say this before I go ahead and move on. If you don't want to use the Fibonacci time tool, what you could use the date range tool right here. You could just move it over either 9, 17, or however many days you want to check it. So for this case, 9 days. So let's go ahead and take off the actual time tool. Let me do this too, right there. You always want to keep the 9th, 7th, 17th, 17 and 26 day marked up. So you could throw this off now. Bam. So now you're ready. Now you have a trade opportunity here. All right. So what you're gonna do, you're gonna go to the 4 hour time frame and see how market's moving here. Right. You see that market's been moving up. It's showing some signs of weakness. Only reason why, if you look at the key June, what's going on with the key June, Jacqueline?
Yeah, sorry.
I was asking what's going on with the key June on the 4 hour time frame.
It's pointing sideways. I mean, it's not pointing up. So
Right. So what's that mean? If the key June is flat,
ranging.
right. So we know that's good answer. So what we know, market's going to range until it breaks the recent high, right? So what you should automatically do, put a line on that high, put a line on that low here. So now you see the market's in a range, and we know that this is going to be our day of change right here. We're looking for opportunity or potential opportunity in this market. So when you're reading this, you should be paying attention to the hour and the 4 hour time frame. See here, it's a lot more clear. It's a lot more clear on the 1 hour time frame. So you also see that we have let me see if I'm right. We have a bearish TK cross right here. So this is giving us a sign of a bearish move. Right? Right? Even though the cloud is still bullish, we have signs of a bearish move. Now you shouldn't just jump the gun just because you see that it's bearish. You want to get the full confirmation that the market is going to do exactly that. Now, if you notice, let's go ahead and throw this off. You notice what's going on with the price, Jay? Catching y'all off guard today. What's going on with the price, Jay?
I'm a little lost, bro. I just got back over here.
All right. So what I'm gonna do, I'm gonna let you look at the chart for a little bit. What do you see the price doing? Like, just tell me what you see.
I think it's gonna happen.
Huh?
Are you asking what I think is going to happen?
No, I'm just saying what you like based off your observation of the market. What's going on with this market?
Okay. Well, currently, it's in a little range.
Okay. What else?
Um, it's in an uptrend as well.
Good. Okay. What else?
What we on the 4 hour?
Yeah.
Am I supposed to say something about the Kihun Sochi that you got up as well?
No, you don't have to.
Oh, okay. What else is it doing?
Yeah, I just want to know what you see.
Oh, okay. Well, that's what I see right now.
All right, perfect. Nothing you said was wrong. The reason why I ask these questions is because I want to see what you observe when you trade. Because if I have an idea of what you see, then I know that you're going to, be a little more successful when you're trading. Because if you could just tell me just something like that, I get you understand what you're seeing. You also see that the market's making lower highs, so the price is obviously moving up. So that was perfect. That was a perfect answer. So what you can do, you can either draw a trend line, and I would probably draw it from here, there. So you see that it's obviously going up from here. There's no denying that price is obviously going up. And usually when I draw my trend line, I try to go from body to body and try to avoid wicks.
Okay.
You see body, 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 body. It was a wick here, but wicks are false moves. So I try to avoid those, right? So here, price is moving up. So if it does make a pullback, now you have an idea where price is going to pull back to. It could pull back to this trend line, or it could break this trend line. So we now have some an idea, somewhat of an idea where the market is going to go. We do also know if it does break this high, it's going to make a newer high, obviously.
Yeah.
So this is where we could look for an N wave, a potential N wave. Let me show you why. All right. Now, N waves are funny, especially when it's a ranging market. So you usually want to go based off that fractal here. So if it is to continue higher using the Fibonacci extension, since this was the bounce off the trend line from this fractal level to this high back down to here. And this will give you your potential take profit for the move to the upside if it's to break this level. Now let's zoom out. Let's go, let's zoom out way, yeah. So if you look back in the past, look where that takes us to. Takes us slightly above the high of all time for US 30. I don't think it'll go that high, but if it does, that'll be amazing. But look, the market always tells you what to look for. Boom, right there. So if it does go, it's gonna make a new high, but I don't see that happening. And if you look, the next target matches this level here. Look to your left, look right here. See how that lines up? This is resistance. This is a strong resistance too. And we could still continue down, and you see here as well. It lines up with these targets. So just want y'all to see that if it does break higher, those will be potential take profit levels. All right. But if it breaks lower, then we have we're just gonna observe the market and see how it plays accordingly. Right. But looking at it here, it looks like market is starting to get really weak off the 4-hour and the hour time frame. We definitely need to pay attention to what's going on on these two time frames. Let's see. Let's add some stuff into the mix now. Let's add the RCI and the ultimate oscillator to the mix. All right. So we see on the ultimate oscillator that, let me actually add this line real quick. I don't have to use the ultimate oscillator. I just use this for finding divergence. That's basically what I use it for, nothing else. So when you're trying to find divergence, I'm not going to go into too much detail on divergence today because I'm trying to keep this about the time theory and the wave theory, but I will talk about it a little bit. But if you're going to look for a trade, put the line at 50 on the ultimate oscillator. Right? All right, so we got that. All right, cool. So now let's see what we have here. we had a little bit of bearish divergence. You see prices just flat, and the ultimate oscillator is moving down like this. Now, if it gets a bounce, the downside here, we could start expecting the bears to start taking over this market. So right now, this is a 50-50 trade. Not going to pull the trigger. We don't have that full confirmation yet. If it goes through this, then we'll throw that off the table. But right now, we see that this is going to the downside. Now, here's another thing that we observed. Looking at the RCI, you know that the main trend is above 80, or right on the line of 80. The midterm line is sitting on the border of 0 and sitting on the border of 0 right here. So we see that the midterm trend is trying to push up higher. So this is saying that we should look for a bullish move. So this is telling me that the market, since the ultimate oscillator and the RCI is giving me two different answers, that means the market is going to still stay in consolidation. You don't want to touch this trade at all until it breaks that high or low on the hour or the 4-hour time frame. The red line, is you see that it's starting to, do a U-turn right here. So if it starts doing a U-turn right here, if it hits below this 0, expect this to follow with it, and then it'll be bearish. But you see that we're at a resistance currently right now in this market. All right. So we know that tomorrow we're going to get our answer with this move. If it's going to continue up or continue down. So let me ask y'all this. Let me see who I'm gonna pick on. All right, Anthony, answer this for me, brother. If you are looking at this, are you going to take this trade to the upside or the downside? Hear you what your thoughts are. And give me a reason why.
I would probably take it on the downside simply because at least I think this is a bearish TK cross right here.
Right.
So that lets me know it's going to either range for a while and possibly go down, especially with not really seeing a strong buy signal right now.
Right. I'm gonna say that's partly right, and I'll tell you why I wouldn't take this trade just yet for two reasons. Remember these fractals, and you know that the market's ranging. Who's to say that we won't get another TK cross and it'll be bullish? Remember, this cloud is still pretty thick right here. So this is what could easily happen, because you got to remember that this cloud is also support. Who's to say that price doesn't come here and then it starts bouncing up and then we'll get a bullish TK cross here, and then price takes off like this? That's why you got to be careful. You got to be patient in these areas. Just because it's the day of change right here, it does not necessarily mean it's going to change immediately. A lot of things has to happen for it to be considered a day of change. So right here, this is what I would look for a trading opportunity. But your answer wasn't wrong. I'm just letting you know that if you did that, you could prematurely get into a trade and take an L on that trade. So your answer is not wrong. It's just something to work on is patience. Right here, let's say it does this, all right? It broke this fractal level. But you see that this level right here is still cloud support, all right? It could easily come up into this range here, easily. But that's when you have to watch this move to see how it tests this fractal here. And then you have to pay attention, is the cloud getting weaker? Because if it comes back to test this fractal, I will look for the trade here, make it to the downside. So what would you look for here? Let's say this, I'm gonna give you a scenario. And I want y'all I want everybody to think about this real quick. If price broke this fractal level, all right, and it came back up to this level, what are you going to look for to take that trade to the downside? I want to see this, because then now you can take that in wave, trade that in wave to the downside. So I want to paint this scenario. You have to have scenarios in your head, because that's why people don't win in trading, because they don't create scenarios or possible scenarios of the market. So looking at this picture, what would you wait for here to take that trade to the downside? I want to answer from everybody. So feel free to answer, or I'm going to start calling on names.
So are you saying you would wait for a retracement?
Yeah, what signal would you wait for here? I'm going to just, everybody go down the line, just say an answer. And I'm going to say what I would look for and what you should look for here in this circle.
Price action?
All right. So Jacqueline says price action. Anybody else? What's another answer? What y'all looking for?
Looking for the cloud to get small. Price action also clouded to start to reverse curve and switch over. Also break out of that range. It'll probably, if it's gonna go that way, it's probably gonna, yeah. You already said it. But also, like I said, the cloud. But it's gonna do a pullback and then take off. But probably get underneath the cloud before I touch it. I've learned by the hard way. Wait for it to get underneath the cloud before you touch it.
Hey, you taking everybody's answer.
Thank you for putting me out there.
I was like, hey, one answer, but that's good.
Okay.
All right, Jay, what you think?
I got to think of something new. Hold on. Bert,
you could say the same thing. You could agree. You could say the same thing.
Well, I am in agreement with Jacqueline and Bert. I guess another thing that we could do to see if it's going to go to the downside is look at I guess a time frame, possibly like the 4 hours. Since this one here is in the cloud, I guess to see if on a 4 hour time frame, if it's not in the cloud, maybe.
Right.
And of course, for me, Tinkerson and Kijun got to be angled down as well.
Right. Okay. Let's see. Anthony, what's your answer? What do you think?
I would probably also look at the RCI to see where it's pointed. Like, is it above or below zero type of thing?
Gotcha. And what exactly on the RCI are you going to be paying attention to?
Forgot the name of the line, but
I'll say this. I'll ask you this. Are you going to pay attention to the green line or the purple line on the RCI if it's going down?
I think it's the purple line. I'm gonna go with the purple line.
Right. That's actually right. So yeah, you'll pay attention to that purple line because that's the one that follows the trend. Right. So you see here, guys, what's trying to happen. Day of change is right here. We see that we're getting a breakout right here. So we may expect the market to move up, but you can't do that just yet. You know why? Why can't we pull the trigger just yet right here? Jay, is that you answering?
Yeah, but were you about to call somebody?
No, that's fine. You spoke up.
I was about to say because that candle hasn't closed yet.
Right, and
that's all I had.
hey, that's actually the perfect answer. I was just messing with you, see what you say.
Oh.
But yeah, you would wait for this candle to close. You don't want to prematurely jump in. Yet it broke that level, but it could easily wick here and turn into one of these and say, I got your money, and continue down. So you don't want to jump in the trade until it breaks that level. Oh, perfect answer. And it has 56 minutes until this candle closes. So be patient. So going back to this, yes, all y'all's answers were perfect. The best one I would look for, I would look for price action. Mainly price action only because as soon as I start getting one of these strong sell candles, at that point, oh, I'm definitely taking that trade at least up to here. And if it breaks it, oh, that's golden. So that would be a 200 pip move from there. It's not bad. That's on the hour chart. So yeah, that's a good move right there. So right now, we're just going to wait and see how this candle closes. Now, if it comes up way up here, then we just have to catch the momentum of the trade. But you don't want to just jump in just to jump in. So, right here as well. You actually take these off here. You want to see something. So, okay, so you remember, Anthony, how you were saying that you would take this down for a second? So
Yeah.
you had this bearish cross right here, but now it's a bullish cross right there. That's how the market changes so fast. That's why you gotta be patient. You see how it changed so fast, and it was like pretty much 2-3 hours apart. These will trick you. Don't just pay attention to the signals. Pay attention to the details of the market. Because right here, looking at it right here, Chiku span's still, inside this price range. If we go to the 15, it's above here. If you go to the hour, it's trying to break above this current level. Try to hold above it too as well. So you got to be patient right here and make sure you don't make that mistake of just jumping in too early. Akinashi candles, the momentum is saying that's going upward. So that's also a good sign right here, but it's still wise to make sure you wait for this candle to close. Look at regular candlesticks. It's saying that this market is trying to push back down. So Hakinashi is just filtering out the noise of the market, right? But are y'all understanding how trading on the day of change is using the time theory?
Roger.
Roger, okay. That's the one. I got one Roger. Any other Rogers or?
Yeah, I get it.
All right. Anybody else?
I get it. It's still a little shaky, but I'm on 3 days in, so.
Gotcha. And everybody say hello to Brandon. He's new to the group.
Okay, what's going on, brother?
What's going on, man?
Man, y'all shady today. Y'all be like, yeah, it's just another guy.
Hey, what's up, though?
I'm just messing with y'all. But yeah, when you trade the day of change, you just want to be patient. It's all about patience. And trading is 100% patience, in my opinion. 100% patience and waiting for those moves to be made. I'm gonna go over another pair and I'm gonna just see. So I'm not looking at US 30. We looked at that. Somebody name a pair right now and I'll take a peek at it.
The pound dollar.
Pound dollar. You love that pound dollar.
XRP.
I'm gonna look at XRP today later. I'm gonna do another live stream today.
Okay.
Hopefully I have more energy today because man, I was starting to fade towards the end of it.
Get the case, huh?
Oh man, pound dollars. You know what's funny? I actually had this marked up for a while. This is actually a Y wave that I have marked up on on British pound dollar. So y'all see the Y wave. So let me use the wave theory and actually let me put that on. So okay. So let's do this. We're gonna use the wave. We're gonna combine the wave and the time theory right now. All right. So this is the Y wave, right? And then if you notice here, within this Y wave, there's an N wave right in here. I didn't see that, did you? But let me show you this. What is this right here? Jay, what is this right here?
Support.
Right. So we should start looking for a potential opportunity. So when you get that let me break it down like this too. All right. So we know that this is support. Let me actually mark this support. All right, let me go ahead and take this off. All right, so we know that's support. Even if you look to the left, we know it's support or potential support. See here, it bounced off support, went up, came back down, held a little bit, came up, finally broke support, held down here, came back up. This was resistance, broke resistance, came back up. Now it tested as support. So we know that we should look for our trading opportunity right here. This is the golden ticket level, right? So what we're gonna do, go ahead and we're gonna whip out our trend fib extensions. Go from this low point, the high point, back down to this low point right in here. And now we have our targets. So we broke at 1-to-1 and we reached that second level here. So you have the first level is NT, the second level is N, which is that 1-to-1. The third level is the V. I don't know why they call it that, but they call it V. And then up here would be your E level, right? Now that's just that one N wave, because there's another N wave in here as well. Can y'all spot the second N wave in here? Because this is the reason why I don't touch this too much in teaching, because if you can't spot the N wave, the second N wave here, you're gonna have a little hard time when it comes to actually using it and applying it. So can anybody see the other N wave here? I'm gonna give you an idea of where it's at, just so y'all be familiar with it. Do y'all see it?
Starting at the little green circle,
Right.
starting at that fractal, and then you go 2 fractals up, and then on that level of 1.25283
Mm-hmm.
on up, that looks like an N wave to me.
All right. So here it is. Right here. It's A, B,
Yeah.
and D would be somewhere up in here. So yeah, that's it.
Okay.
So what you do, you use your fib tool, bam, plot it, boom. It hit that E levels, so you should definitely taking profit right there, or taking something off the table. If you did it, then dang, you missed out 500 pips right there. At least take 500 pips. The full extent of the move was 574 pips. Now, using the Hakanashi candle, let's see. So we go back. So yeah, you should definitely look for the trading opportunity right here. Why should we look for our trading opportunity right here?
because that's price action.
Okay, but what exactly is it? What candle is it?
If memory serves me correctly, I believe that's a standing top.
No, no, it's not.
Is that a pin bar, hammer?
Pin bar, that's a good one.
I don't know what that is.
Here's the simplest way to figure this one out. Remember, this is Heikin-Ashi candles. I'm gonna teach you Heikin-Ashi candles too. We zoom in a little bit closer. This is a hammer, first of all, just to let y'all know. But here's how you read Heikin-Ashi candles. This is how you tell when the trend is starting to get weaker. Notice how this candle was below this one, right? This is saying that the market is starting to get weak here. So you see it came up, came back down. But here, this is really strong evidence that this market's getting really weak here. You got a wick on both sides, and this candle fell to close below the previous candle. So this is a hammer, but you see with Heikin-Ashi, it fell to close beneath you. So we should start looking for a bullish move. So what you should do at this point, put a line right here. We got that line. Then you gotta come down to your 4-hour time frame. Right in here. This is where our trade's at. So you see it pushed a little bit lower. You should have been in on at least this candle because this was a strong bullish candle here. Now, if you have missed that, that's fine. You put your buy entry right there at this fractal level. Get that fractal breakout, take that trade to the upside. Y'all see that? And if you look here, this N wave's on the 4-hour time frame too. Got that N wave here. Like I said, this N waves all day, every day. And then if you want to take it further, there's a V wave right here. Actually made a P wave right here. Yeah, this is actually a P wave. You see that right here? This would have been an N wave, but price fell to get above this B level. So then you form this P wave right here. And then it broke out that P wave off. Y'all see how that works? It's just breaking it down to the nitty gritty. Yeah, you see price then took off to the upside. So now we're going to use the wave theory and time theory right now. We had an I wave right here. I wave was made it to this level. You see that we have resistance up here. Y'all got to look left. Whenever you're trading, always zoom out, y'all. I don't know if y'all use that technique or not, but zoom out. Get the bigger picture. Get the full perspective of the market. Stop trying to read the market from way up close. Zoom out. So we know our next level of support is this level right here. So why? Look at it. Got a fractal here and a fractal here. Line it up. Boom. You actually make that a little bit lower. So now we have a range to play in. So if price comes down from here, if price comes down here, it's going to come down to this level or in here. And if it holds here, boom, another N wave. Y'all see how that works? All right.
Yeah.
This you get to predict the market before it even moves. And once you get better at it, you're gonna see the market before it happens. it takes a lot of practice, but it'll click eventually. No, you're not gonna get this first time. When I was learning from Chaos Trader, man, it took me at least 3 months to get this down, the wave theory and all that. Now I pretty much use the wave theory by itself. I use other means too, but I use the wave theory a lot more. A lot more. So let's see. So now we're gonna actually use the time theory. So let's look at it. Let's take a look. So you could start from this point, or you could start from this point. But I prefer this point, all right? Just remember when you're using the time theory, you can start at the lowest point or the highest point. So right here, move it over, bam. So now that we got this going, look what's going on right here. Do we have a day of change or not? Jacqueline, do we have a day of change here? Jacqueline. All right.
Oh, sorry. I had you on mute. Do I see a day of change? Well, that looks like a doji.
Oh, but look at the bottom here. Do we have a day of change according to the lines?
Yes.
What number?
A 26?
Yes, perfect. See, I try to get you off guard, but yeah, we have day 26 from this point over 26 bars. So what we could expect the market to either continue up or break this point. Doesn't necessarily we're gonna have doesn't necessarily mean that it's going to happen fast. You just gotta pay attention to this level here. So looking at it, we know that this area is either gonna do this or do this. Now look here. So this is day 26, so we should pay attention to day 33 because day 33, where is it at? Here we go. Right here, this is day 33, right here. Actually, I'm actually gonna get rid of that line. What I'm gonna do this. Boom, right there, day 33. Perfect. So market will either extend for the next level up or extend down to 33 to the next level. So it may come here or it may come here. See how that works? So if it extends to the downside, we know that the market's gonna make what? What is this formation here?
It's gonna be a V.
Yep, a V wave. Y'all see how this is starting to click?
Yep.
So it's all about finding that day, finding the next day, and see how long it could potentially extend. Now, it doesn't mean necessarily that it's going to do this all, because what could happen here, it could come here easily, right? Because remember, this is still support, right? So what could happen is it could turn into an N wave here. Because this is because it could potentially be a V wave or an N wave. And I'm gonna show you how it could be an N wave. Let me get that extension right there. So from this high point, this low point, that high point, that's your I waves. Boom, right there. See how it could bounce off this level and come up? If it breaks past this V level too. Because what will happen until it gets here, remember, you still got to reach day 33. You could get here by day 33. Y'all see how that works?
Yes.
A lot could happen within that time. So you're drawing out a scenario because we noticed the market's moving higher. And if we do this, look at this. Look at that.
Nice.
You can see the market before it happens almost.
Mm-hmm.
It's just you got to really map it out and see the scenarios of what's really going on in this market.
So I did take a trade last night on this currency pair. I took a sell, so I did wake up to some profits. So my question to you is in terms of what's the best time to trade it? Do you like, is it better to do like a swing trade in the evening? Like, I'm not sure. Is it?
That's funny you say that because I remember Bert telling me trading this in the evening's the best. Like
Oh, good.
3 in the
Okay.
morning. Bert, you said 3 in the morning, right?
Yeah, they started making the move around 3. If you get on like about I say before 2, maybe about 1:45, you'll see the market starting to really kind of ramp up, especially the European market like G
Right.
pound, the pound dollar, and also Europe. Also, it's a couple of them that's running. They start running right around 2 in the morning. They start making their move, but like around between midnight to about 2, they generally do their hardest pullback number come between midnight and 2 in the morning. So be careful because if you fall asleep and you miss that pullback, it could knock you out the market, and it has done me several times, and I've lost considerable amount of money.
Okay.
Thanks for sharing that. I'm definitely keeping that in mind. But y'all see how powerful this tool is? You see why it's a little complicated to teach because you see all the intricate things that goes on with it, and then combining it with Ichimoku, because I'm not even using Ichimoku. I'm showing y'all just without it. So if you add an Ichimoku on here, that also takes you to the Kijun level too. Y'all see that? And you see that this is a bullish move so far. So this is a move that looks very possible right here.
It
So,
literally paints the picture for you.
yeah,
Yeah.
it does. It's just adding on, having a little bit of observation, studying the time, and then using the waves. Because here, let me see this. Take that off real quick. Just from here to here, that's your I wave. Then coming down for that correction, that the market has to make a correction. Got your impulse, strong impulse, correction. Now at this correction, we're either going to continue down or we're going to accelerate back to the upside until we get to 33, and that'll take us up to here. So we have an idea what the market is going to do. We have a
What?
Go ahead.
What time does that last candle close? Is it
The current one right now?
the current one? Yeah.
Yeah, in 33 minutes.
Okay.
Yeah, this will be the at 4 o'clock my time, and
Yeah, it's 5 my time.
yeah, 5 your time.
5 Eastern. Okay.
Yeah. So very soon. And so this is actually a trading opportunity for everybody, so y'all can definitely mark this up. I'm actually gonna screenshot this. I'm gonna just say potential move. I'm not gonna say it's absolute yet, but it's still a potential move. This is GDP. All right, so I just put it in the group. So something to observe. So let me take a peek at this. Let me take this off real quick. This is just a potential move. We don't have an absolute yet. So now we're gonna put a line here. And now we're gonna go down to the 4-hour chart. So here on the 4-hour chart, what's going on here? We have a bearish TK cross. So this move might be accurate. I'm looking at the 4 hour. I go down here like we said. That'd be amazing. Then we could take that trade here. So we'll definitely look for a trade here if it does manage to get this low. But that right now everything is speculation. It's just mapping out the market and seeing how it looks right now. If you look here, the midterm trend is coming down, but until it gets underneath the zero, then I'll still remain bullish. So can't say just yet. We'll see how it reacts towards the cloud. Any divergence? None. No, none. So right now, we're gonna see how this market holds up, how this Kumo holds up, and if it either breaks through or continues up. Looking at the 1 hour, looks like the market's trying to move lower on the 1 hour. And if you look here, what's RCI telling us right here?
The price is going down for sure.
Right.
But
yeah, go ahead.
I think the trend, I forget what the red line tells you.
Off the signal. It
Okay,
helps,
yeah.
it has you into the markets.
Yeah, so that line is above 80, so that might be a nice little signal coming up.
Right. So according to this signal, what would you look for according to all these indications on here? And before you answer, look at what's going on with the cloud. Because right now we're at hold on a second. Let me give you a little bit more of an eye on this one. I don't want to keep this cluttered up. But if you look here, remember what I was telling y'all earlier. You see that break? Broke the fractal, came back to retest it, ranged, resistance, broke again, came to retest it. So now we're looking for what?
I expect it to go back down through the cloud again before it tries to retest and go up.
Got you. So at this point, we're looking for this or this, right? The reason why we're looking for the upward move as well, because right now there's no signal of the market getting weak yet, according to the Heikin-Nashi candles. So you're gonna have to wait for probably 2 hours of candles to make sure. So I'm gonna actually do this. So actually, you might actually want to wait, monitor the 2 hour time frame for this move. Go to the 2 hour chart. Yeah, because you see here on the 2 hour time frame, you got a little bit of a better reading. That you gotta understand it. You gotta select your time frames pretty wisely. Now, if we're going to take the clouds off and break it down here, let's do this. So far, we got this movement. I don't like using wicks, but for this instance, we got to. So right now, we're in an early channel or a potential channel. So this could be the move right here. If it fails to break here to the upside, expect this downward movement, and it'll be a channel to the downside around this level here. Y'all see how that combining all these, you just gotta take your time when you read these charts. You don't rush when you're reading these charts. Really break down the time frames and understand your patterns too and how to mark up your chart. I'm actually gonna put this in the group chat. I was meaning to do this. I'm gonna put the pattern list in there soon. But y'all, do y'all understand what y'all are seeing right now on the potential of this move? When you break down a chart, always start off with the daily and break it down pretty much down to the 15 if you want to. But you want to break it down between the daily down to at least the hour, at least down to the hour. And mark up the chart and really break it down to where you understand what you see. Any questions?
Yeah, can you go back to the daily time frame real quick?
Right, I'll do that. Man. All right. What you want to see?
Somewhat forgot my question, but bear with me here. I know right now we're looking for a possible trade. You know, looking at the 2 hour, waiting to see what the candles do.
Right.
So looking at the daily here, using the key home Suchi, the also with the Hikanashi, because one thing I don't remember about the Hikanashi is on the next candle that you're waiting to form right here on the daily.
Right.
Depending on what direction we should go, I know you know we usually wait on a candle to close before you have confirmation to enter into certain trades, but with the Hikanashi, will it give us a pretty strong idea on which direction the market may want to move once this next daily candle open?
Yes.
Okay.
That's what Hakanashi is used for. It's used to find the trend of the market. It's very readable. If you look here, nothing but purple candles.
Yeah.
So let me actually do this because people don't understand Hakanashi helps you stay in your trade longer, right? If you know how to read it properly. So look at this. This is Hakanashi right here, right? Now let me show you how it looks with the regular candles. Well, this is actually not a bad move. But right here, you probably might have been a little iffy. Definitely here, you would have been iffy. And then, yeah, definitely here. Let me show you another example. So, this is actually not a bad market. This is actually a strong market. So this is not really a bad example. So, actually, right in here, let me show you this one. This is not. I'm gonna just mark up these areas. I'm gonna let you see what it looks like with and without Hakanashi. And you'll see why it keeps you in your trade longer. So y'all see the difference? Or you see why you could potentially hold it longer?
Yeah. Yeah, I see it is clearing up a lot of noise.
Especially in this area, like if you throw this on, this area, you're like, oh, bearish, super bearish. Oh,
Yeah, times I would have got out of that trade looking at them regular candles.
Yeah, looking at it with the Hakanashi again, like this was a buy signal right here, indecision, and then this is saying it's a sell, but then you got your buy signal right here. So it helps you kind of stay in the market. Just know this: if you understand how to read the fractals too, as long as it don't break these fractal levels, you're good. Because let's say you entered in down here, you took this trade up, and then you get this candle here, and it made this fractal level. Just realize it never closed underneath this fractal, so you can still hang in with this trade. And then also, if you're an RCI user, you can still hold this trade because of daily on the RCI. Mainly, you gotta want to look at this and monitor it on the 4 hour anyway. So You know, the daily's just giving you confirmation that I'll just hold the trade. 4 hours for sure. You want to definitely watch this time frame. I mean, watch this move. Because if you go to the 4 hour time frame, let me show you what it looked like here. This, remember here, this is a whole circle here. It looks very strong to the upside. Just very little moves to the downside. Like here, but I'm pretty sure there's a cloud right here, and then it bounced off and then went up. Yeah, see a cloud right there, then it went up. Yeah, you could kind of see the market without, you know, once you get better, you could kind of see the market without using the clouds, but it helps to visualize and so you can make a quick read and then make a decision. So here on the daily time frame, this was I'm pretty sure the indecision candle was somewhere in here. Well, the indecision was right in here. Going back to the 4 hour chart. Yeah, right in here, like I thought. So yeah, you would have made a move until you got like a bullish confirmation. And why you would have held this trade anyway, you got all this cloud action. Until it broke underneath the cloud, then that's when you probably want to get out. But you had no reason to get out still.
Yeah, it never went below your trend line. And you're still in profit the whole time as well.
Right. So yeah, there was no reason to get out of there. But I'm glad that y'all starting to see this a lot clearer, because trading it or trading with Ichimoku, the time theory, and all this together, you know, it's mind-boggling at first, because I'm pretty sure when y'all start applying it, y'all gonna be like, man, what did he just teach? But when you're really studying this every time, then you're gonna be like, oh, I'm gonna put a video in the group chat. My teacher just released another video on the time theory, so I'm gonna put that in the group chat as well. But y'all are starting to, you know, understand how it works in detail. There's simple methods to use it, but this is as simple as it gets, breaking it down to like this, right? Any questions so far? Concerns, comments? Because if not, if y'all don't have any questions, I'm pretty much done teaching this part. I just wanted to reintroduce it because I have went over this before, but I went over it in a little bit more detail today. Actually, a lot more detail than the first time, because this is, you know, y'all actually see the move happening before y'all's eyes. So it's the same with, I'm gonna show y'all Bitcoin and then I'm gonna stop. Because I was talking, I believe I was talking with you, Bert. Remember, if y'all remember in class, I mean in the Discord group, I had called Bitcoin to go up at this time because it was stuck in this P wave. Boom, it did exactly that. Now, had you got in this move here towards this bottom area, I'm gonna go to the 4 hour time frame to get a better read. Had you got in right here, just at that moment, you would at least, at that highest point, you would have almost made 2K pips off that move. So that's why I like using the time and the wave theory and kicking the markets. But it's best if you're gonna use this trading strategy, stick with the daily time frame and then break it down from there. All right, that's the best way to use this. And you know, if y'all are trading Bitcoin at all or looking at Bitcoin at all, I have Bitcoin going up to 15K. I have my targets already set up. Actually, another 13K, my bad. So these are my Bitcoin targets right now. I haven't really seen the move or the signal for it yet, so I haven't called it in the group chat. But until I get that read, then I'll send that signal out to you guys. But it's happening soon, hopefully. Hopefully it happens soon. Hopefully this is not, you know, because I also see this trying to form a head and shoulders, if y'all see that. Y'all see this head and shoulders trying to form here? hopefully it doesn't become a head and shoulders. Otherwise, it's going to bring the whole market down to at least this 9K level right here. So that's what I'm observing as well. But we will see. Can't say much until it gets above this level or below this level. Other than that, I'm done. I hope you guys understand a little bit more on the time theory, the wave theory. It's recorded, so y'all could definitely catch the recording in the private area on YouTube. I'm going to put in the private section. So definitely rewatch it if you need to study it and write about it or take notes on it. But I hope it made sense to you guys. If you have anything to say, definitely say it now or ask any question.
Are you still doing a live stream later today?
Yeah, I am.
Okay.
If I'm not, I'll let y'all know because y'all be the first to know. Y'all, then Twitter will be the next. But usually I'll let y'all know first.
All right, thank you.
Yeah, no problem.
What broker do you use, or what broker is everyone using? Because the one I'm using, I don't really like them.
Who's your broker?
It's LMFX.
Oh, use them. I use Crypto Rocket, but they just recently stopped you taking. Actually, no, you live in Canada, so they might accept you. They stopped taking U.S. traders.
Oh, really? Okay.
Yeah, they just stopped. And so I use them or Hugo's Way.
Okay.
Hugo's
Yeah, I've
Way.
heard of that one.
Yeah, Hugo's Way actually gypped me out of money, but I still use. Yeah, the only reason why I use them still is because. Well, when I say they gypped me out of money, they didn't take my money. What happened was they have this program when you make a certain amount and you have people once you make a certain amount of trading volume, they pay you, right? So they did give me my money for the trading volume that I had made. But other than that, you can still make withdrawals and all that. I was just like, I want my money for my trading volume. So that's why I have Crypto Rocket.
Okay.
So definitely check Crypto Rocket out and Hugo's Way. Anybody with questions? If not, I'm gonna pray us out of here. Anything else?
I'm good.
Good.
No, that was good. Thank you.
No problem. Bert, any questions or are you good?
I'm Gucci fam. I'm probably gonna. I've been talking to a client, so I'll probably be going back to it because I've been in and out of listening to what you're saying. So.
Okay.
Yeah.
All right. Good thing I got it recorded then.
Yeah. Exactly.
All right. So I'm gonna pray us out of here, and then we gonna go our separate ways. So, Heavenly Father, we thank you for allowing us to come together at this time to learn how to trade and to build our wealth. We ask you that you bless us to be a blessing to others with our financial gains that we make through our trading. We ask that you allow us to be the lenders and not the borrowers from this point on, and allow us to still be led by your Spirit, Lord. We know that you come first and foremost in all aspects of our life. So let us not just put the money first. Let us put your kingdom first and your will and your desire first. Let us, everybody that's on this call, let's be obedient to your word. Let's be led by the Spirit first and foremost, and allow us to continue to be who you called us to be. We ask for an obedient mind, an obedient spirit, and an obedient heart to your word, Father God. Let us not only be hearers of your word, but also doers of the word. In Jesus' name I pray. Amen. All right, you guys. I will see you. Hopefully, I do this live stream today. Hopefully, nothing pops up that I can't. I will let you guys know, and I will see you later. All right. Peace.